Good Monday morning. I'm Clinton Griffiths. All eyes are on the cattle market this week, watching for a rebound after last week's saw markets post their longest losing streak since July. And that's our top story on AgDay. Live cattle futures have fallen nearly $4 per hundred in the last 10 days. And helping push prices lower is speculation that animal demand is disappearing. Cargill announcing plans to idle its Plainview, Texas plant isn't helping. The beef processing plant says it's temporarily shutting down in February 1st due to a lack of cattle in the area. Cargill says it plans to reopen once cattle numbers rebound. Drought has decimated herd populations in recent years, and while 2,000 plant workers are impacted, area farmers may also suffer. Many rely on water from the plant for irrigation.
Well, there is some water that we are going to have available for a certain period of time while we continue to operate until February 1st. And our folks who work with the local farmers in that area have been in contact with them and are working with them with regard to the water that is going to be available until we shut down. But at some point, we will not have water.
Analysts say while the closing is bearish for cattle markets in the short term, in the long term, it means less beef for consumers, and that's going to put pressure on already high prices. Experts say rising costs are starting to impact consumer behavior.
We're expecting in 2013 to see a sharper decrease compared to 2012. Per capita beef consumption will probably drop about 3.5%. Not down quite as much because exports will be down a little bit and imports will probably be up a little bit. But nevertheless, that's a pretty big decrease. That compares to the kind of per capita consumption change that we saw in 2011 compared to 2010. And so that will certainly put more pressure on wholesale and retail prices as we go forward. And we should see that happen in the first quarter of the year with the decreases in beef production taking effect here right away.
So what does it mean for cattle prices? National reporter Tyne Morgan caught up with Bob Utterback in Florida last week. He says January's feed utilization numbers will be driving cattle markets this year. Tyne?
I think the problem for the hog and cattle, you got cattle, went up to 137 here recently, backed off around 135 in April. I think we could go to 140 in the April. So I'm not really worried about cattle from April to probably into some months. I think I would want to stay open in both cattle and a lot of people are very positive on hogs. I think the slaughter numbers are getting tight, and I think the market is getting ready for a good bounce here. We've backed off here in the last couple of weeks. I think we're set for a good bounce, so I would be careful on any selling campaign.
Yeah, they were talking about rebounding this spring. So is that still kind of the case, looking at losses in December, yes, that rebounding taking place now?
I see it all happening.
Okay.
I see limited breeding herd expansion coming in. But where the real pressure is I think they need to control their input costs. I think they really need to have their feed costs locked in. Any weakness now on a secondary correction to the end of this week, their first next week.
Okay.
Yeah. I would say you need to get your feed costs locked in clear to the next new crop.
So act quickly.
Act quickly. Don't take the gamble of going hand to mouth in the summer. Yeah, you might, if you have a great crop, you'll be happy or you didn't protect, but this is one of those years where the variability in corn, old crop corn, is already tight and in basis is going to be firm.
Yeah.
You want to get control of the cash fiscal more than the board.